Hello, this is Evan here from the Trade Risk on Wednesday, December 16th, 2020. We are intraday right now, and this is our weekly swing trade ideas where we bring you stocks based on a variety of discretionary, technical, and quantitative signals. As always, these videos are sponsored by our partners over at Investors Business Daily. We curate all of our long ideas from their stock lists. You can get access to their stock list with a link in the description of this video. So we are going to continue on with our new format here, basically three different buckets. We've got the discretionary bucket, which is just my sort of interpretation of, kind of classic technical analysis. Then we have our rigid sort of technical stock scans that we're going to look at. And then we've got, today we've got one quantitative signal coming from one of our trading systems that we'll share at the end. So let's dive into it. First one here is Vsto. And the reason this hits sort of my radar here as I was looking through stocks, it's not trading at all-time highs. You can clearly see IPO is 2014. We're well below those highs, but it is trading at multi-year highs and 52-week highs or just underneath them. And what you'll notice also is that we've got this range that has developed here for the past, let's call it since August to present day, totally sideways. And if we go to a daily chart here, you can see the levels are a bit more clear. And what I like specifically about this stock is yesterday we had an increased volume day and a range expansion to the upside. So 6% move to the upside. We essentially resolved, kind of this little range that it was in. We broke this downtrend line that it has been in. And really, it's just a case to be made to sort of rally back to the top end of this broader range. So obviously I have no idea if it actually gets there or not, but from my perspective, like sort of the developing action here, can get a move back up into the 23s, high 23s. Obviously, if it breaks that, then that's icing on the cake. And, this long, I'll call it a long-term trend since early this year, late last year, can continue to the upside. So Vsto, that's the first name there. That looks interesting. DGX, number 2 here. This one, just very classic, kind of lower highs, higher lows, tightening pattern here. With volatility contraction comes expansion. And so you can see with today's action here, the highs of today, the lows of today, basically tagging kind of this rising and declining trend line that has been in place for the past couple of months. And I think it's just an interesting setup here to watch and to see which way this ends up spilling over or breaking out of, and to kind of play in that momentum. It is a stock that is trading at its all-time highs or just underneath its all-time highs. So, always from my perspective, I like to trade in the direction of the dominant trend, but, we don't know which way this is going to break. So DGX, that's number 2. Last but not least, I wasn't going to throw it on here. It's sort of a marginal setup is Netflix. I haven't really liked Netflix from a technical perspective for a while. Hasn't seemed to offer it up too much. But when we look here, we've got essentially this consolidation that has taken place since July, and we've got levels that are really clear. So support has been coming in for the stock around the mid to upper 400s, and supply has been kind of setting into this market in the upper 500s. So what we've got recently here is just more kind of convincing move off of these lows. We're trying to rally back into the midpoint here, and the trade is potentially to get back up to the upper end, and then again we'll see if it has enough energy this time to potentially break out. So Netflix, don't love it, but it's something that is marginally interesting there as the levels are pretty clear. So that's those are the three from sort of my bird's eye view of some of the stocks that we follow here, IBD's list and our TR150 watch list. Let's take a look at some of the stock scans we have. So we're going to be looking at 2 stocks today. They both come from our Pullback strength scan, most popular scan that we have in our store. If you want to know more about this scan, I'll try and put a link right now in the top right, or just head to the Trade Risk, click on the store. This is called the Pullback strength scan. So PDD, this is a stock we have talked about in the past. It is a leader, and that means that we continue to track leaders, and when they set up, we try and highlight them. So PDD has recently broken out to new highs again, up around 160 just a few days ago. And since that point, it has essentially been pulling back here, kind of lower volume and pretty orderly fashion. So this scan here is looking basically for this turning point, this breakout after a little bit of a pullback in a strong name. And you can essentially see all of the ingredients right there, breaking this multi-day trend line, trying to get going to the upside. And that's essentially the setup, the pattern. Looks like a bull flag, if you will. Number 2 from this particular scan is SE, so C Limited. Again, you can see a very similar pattern here. You've got a strong stock trading at or just off of all-time highs. You've got this momentum move to the upside here, making all-time highs at 211 about 5 days ago, 6 days ago. You've got this orderly pullback, and now we're starting to break out of this pattern here. We're starting to break out of this downtrend and in the direction of the primary trend. So very similar there. That's our pullback strength scan. So those two coming from our stock scans. And last but not least is a quantitative signal, an SWBI, so Smith & Wesson. Now, admittedly, our signal here has had us get into this much earlier. So we've been sitting in this stock for quite some time. I think we own it, geez, I don't have the exact price. I think it's right around where we're currently trading. I think we own it at 17 even, so maybe we're a few cents underwater, but we're around there. And this is our Merlin trading system. This is a quantitative signal, so it's based on years and years of data. And essentially here, what we're looking for is a move back up towards these highs. This system likes to, not always, but if I want to try and simplify it, likes to kind of buy things at a discount, at a dip, sometimes significant dips, sometimes more shallow, but essentially looking for kind of bargain prices in strong stocks. Smith & Wesson has been a very strong stock for 2020. It has certainly sold off from its highs, but the high volume that came in yesterday, the expansion in range, looks like it wants to hold this support in here around $15. Of course, with all these names and setups and patterns, you want to do your own homework. None of these are direct recommendations, obviously, so do your homework. Make sure all of these fit your objective price pattern, etc., because I, unfortunately, will not be here updating you every single day on new information that comes out on these stocks. So hopefully you guys understand that. Hopefully these setups are interesting or helpful to you. As always, we do these videos every Wednesday, so thanks so much for tuning in. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here on Friday for the weekly stock market recap. We'll catch you then.